Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay, home ownership consultant at thewealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, we hate to tell folks we told you so, but in a show you did back in June, one of our listeners noted that you warned about a change in the housing market caused by CMHC. John asks, how did Ross know that this change, that the CMHC's move to limit gross debt service ratios, would cause house prices to rise? Well, Ross, how did you know?
Because, John, and listeners, house prices have nothing to do with house prices. House prices have nothing to do with the price of houses. When CMHC institutes a change to a rule, a change to the home lending infrastructure, there will be a reciprocal change in the housing data that will be reported over the next 3 to 6 months. The price of homes will not change over that 3 to 6 month period, but what will happen is the average purchase price paid will change. In other words, the average buyer will be a totally different buyer after the change is enacted than who was buying in the market before the change came into effect. Because these buyers will be spending different amount of money on average, you're going to see a change in the average house price reported by CBC, your local newspapers, and everyone else in the country. That's because they report what the average buyer is paying in a month, as we have said on the show over and over for well over 3 years now. So back in June, when we were on the show and we said to everybody, you're going to see a change happen in the stats because of this CMHC change, this is exactly what we're talking about. When CMHC makes a change that limits the number of first-time buyers who will be moving into a housing market, you are always going to see the average selling price increase. Always. When CMHC institutes a rule in the middle of a pandemic lockdown, that increase only is exacerbated. It becomes way, way higher. And this is why you hear all these false claims of house price gains across the country. CBC has the audacity this week to announce that the average house price in Canada is $607,000. This is what we would like your listeners to understand. The national broadcaster in Canada, who receives over $1 billion of taxpayer funding to report the news truthfully and unbiased, this week said the average house price in Canada was $607,000. Now, anybody can go to Realtor.ca today and punch in look at all of the inventory that's for sale, and then punch in a maximum of $607,000, and you're going to see, obviously, what CMHC or what CBC has reported is false. CBC reports whatever the Canadian Real Estate Association tells them, and they don't even have the integrity to ask for proof. That's why when we go all the way back to 2016, when British Columbia housing market was at the peak of its trading cycle, where the multiplicity of sales was at its highest, where house price gains were at their highest, the share of sales in Canada going to British Columbia was around 23%. they dropped down to 10%. It was a disproportionate share of sales in the spring of 2016 that were driving the national average house price higher. You didn't hear that anywhere in Canada. And if you did hear it, then why in the following months did you not hear it get corrected? If that house price illusion that was built into the spring of 2016 took place, why didn't it get withdrawn from the market in the months going forward? Well, that's because all of a sudden Toronto's housing market starts to exceed its share of sale. Why? Because every housing market moves in a different way. Every housing market is following its own trading cycle. These trading cycles mean that you're always going to have an artificially inflated average price being reported, no matter what month we're talking about over the last 40 years. So even in months where the house price is correcting, it's still not really telling you the real correction that's been ongoing. How did we know when CMHC was going to institute this rule on July the 1st that in the following months house price illusion was going to increase in July, August, September, October, and even early in November? How did we know that? That's because we knew that they were going to cut out first-time buyers from the market. Ross, well, how do you know that that's true? Well, if you go and you hear all the comments about the condos not selling, well, those are first-time buyer purchases. So obviously it's true. If you go to listen to CMHC's own words, Evan Siddall is crying that Genworth, now called Sagan, now owned by Brookfield, the owner of Royal LePage, which is another travesty that's being laid upon the Canadian public. Evan Siddall was complaining that they weren't getting enough share of the market, that the share of the market was shifting to Genworth. Well, he's just simply wrong, because Genworth didn't report an increase that was reciprocal to the CMHC laws. What Evan Siddall didn't understand was he was cutting out first-time buyers from the market. He didn't understand that. So when we come on the show and we give you a forecast, look, I'll tell your listeners this. We are not going to say something on the show that will not be proven correct in the future, okay? We just are not going to do that because we don't want to be caught off guard. When we come on the show, we know that people are going to listen to this, and some people will take action, even though they're not dealing with us, okay? And when they take that action, it's going to cost them for the next 25 years. So I'm certainly not going to come on to the show with an opinion and then later come back on and say, oh, I was wrong. Nobody knew that this was going to happen. The beautiful thing about housing markets, folks, the beautiful thing about housing markets is that the change that is going to be recorded months later is you can see in the data right now. So you are never caught off guard. You never have to worry about giving bad advice because you're leading what the public is going to know by months in advance. You only need to go back to our old House Street shows and listen to what we had to say and then fact check us. Go ahead, do it. Fact check us. Fact check every comment we make in the show. We know that we're giving such an advance warning in the market. We're reading the market so far in advance. Lockdown doesn't matter. Pandemic doesn't matter. Changes to CMHC doesn't matter. Changes to the mortgage rate doesn't matter. Changes to the employment rate doesn't matter. Those things don't matter. Because when that news is being announced, we are already recording the market, again, months in advance. So with those forecasts, we adjust for the changes you're hearing today. And because our information is so far, our forecasts are so far forward, we don't have to worry about it. We're still issuing 8-month forecasts for every major CMA in Canada. So even during this lockdown, our 8-month forecasts have not changed. They have still been there. We pulled back our 12-month forecast because we needed to see what kind of changes were going to be implemented, so that when we look at that last 4 months, 8 months from now, when we're forecasting the next 4 months, we have taken the changes into account. And since people don't make a decision in a year basis, even with the 8-month warning that we're giving them, they can still make a rational choice in what they want to do. And that's why, John, you can go back to our old Howe Street shows and you can figure out yourself whether we were accurate or not.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ross Kay. Ross, back in April on the 21st, you forecast what you called a condo clown show was about to hit. Obviously, the last couple of months, your forecast is again proven correct. How do you know the pattern you cited would repeat itself once again, especially in Toronto?
Well, so I hope everybody goes back and listens to that show back in April, okay? Because they'll see that I cited 1974, and I cited again 1990. And I cited how the pattern simply repeats itself, because that's how the realty cycle works. So there is a greater cycle called the realty cycle, okay? And it is more impacted by debt levels, the interest rate cycle, and items like that. It's a lot longer period of time. The trading cycles, the number of trading cycles that happen within a realty cycle, determine how much house price illusion is going to be created. Within a trading cycle, there's trading periods. These trading periods vary from city to city each month. So back in April, when we said on the show, I mean, we said it right on the show, that what you're hearing from these people about the condo market, about how condo sales are not going to be impacted, it simply was not reflective of 1974, and it wasn't reflective of 1990. Because when you look at those, when you look at the data from then, the pattern that we have happened now is exactly the same. Each one of these periods is always triggered by something, okay? So when in the previous section, we talked about the CMHC announcement. Okay, when CMHC makes that announcement, we know that in the coming months, what's going to happen to the market. And we also know where the market is, like what the balance of the market is. We know what trading cycle it's in. We know what trading period that we're in. And we know each CMA across Canada, what trading period they are all in, and what the share of sales is going to be reported by each one of those CMAs, and then provinces, and then in the national CREA numbers. And we know what false narrative is going to be created by the Canadian Real Estate Association. So when we knew what was going to happen in the condo market, and this isn't like we're a soothsayer, this isn't like we're genius or idiot savants here. This is simply because we are reading the data so far ahead, as we said in the last show. So when we were on the show telling you what's going to happen, it's because we knew the number of closings that were going to take place in the pre-sale that had been pre-saled from years ago, because the way the completions were lining up. We have 3 other data sets that we access that tell us what kind of closings are going to take place in the new home sector within a month, or up to 45 days in some cases, depending on what time of the month we're looking at. And then we align that with the CM8C data, and then we align it to what's going on in the local CMAs, where they are in their trading cycles, and which stage that market is entering into. And from that, you know what kind of sales are going to take place, or what kind of oversupply exists. That means the clown show of the condo market, it happens when you take all of the factors that were coming into play. We had new closings picking up, brand new construction closings picking up in both Vancouver and Toronto. The Montreal market had already slowed down, so it wasn't going to be as representative in the same way in the national data. We then looked at where first-time buyers at a stage where they're going to be commanding a high share in the market. No, they weren't. We also then had to take into account that CM8C change. Again, cutting first-time buyers out of the market. We had to look at mortgage interest rates. Mortgage interest rates were dropping, but they weren't able to drop enough to stimulate first-time buyers. There were no new incentives in the market. In other words, the government hadn't created a land transfer tax rebate or something of that nature, which organized real estate has been lobbying for now for, 8 years. We knew all that was happening, and then you have to look, and it's like the perfect storm. But this wasn't the first perfect storm. The first perfect storm our data recorded was 1974, when Bill Davis changed the rules for land speculation profits. Then the second one was in 1990, where the Bank of Canada thought they could raise interest rates. Okay, they raised interest rates, and that was it. The market was over. It was done. Just like that, overnight. Magic. Even though the Bank of Canada responded and dropped rates when they saw that the housing market was slowing down, they couldn't pull it out of that withdrawal. Because the multiplicity of sales that works on the way up works on the way down too, folks. So what you're seeing right now today when you're hearing about these 15% year-over-year average house price, average gains by the Canadian Real Estate Association, you're hearing the peak of you're actually hearing a peak of a trading cycle. That's what you're actually hearing. You just don't know it because Canadian Real Estate Association doesn't know it. So when we were forecasting the clown show, you got to look at all of those variables, like all of those things that were coming together. And this is like irrefutable. When you look at it, the number of first-time buyers that would have to come into the market for the type of condos that were coming on stream did not exist. They were not in a position to buy because they had been exhausted since the fall of 2017. Okay, because of course, remember everyone, in the Toronto market, falling prices in the fall of 2017. What do falling prices mean? First-time buyers are re-entering the market, driving the price down. And then in the ensuing 2 years, you get a rising house price change again. Exactly what happened. So when we made that clown show, this is an obvious thing to us, Jim. This is an obvious thing. It's black and white. It's so obvious that we shake our heads and we can't understand that CM8C doesn't understand it, okay? To us, this is as easy as saying the world is round, except CM8C thinks it's flat. So that forecast was not a smart forecast. It wasn't prescient. Well, I guess maybe it was prescient because nobody else called it. But it was accurate only because that's what the data was already saying. And the data is never wrong. The only thing that's wrong are the stats, because the stats are so latent to what the data records, you never have to worry about making a mistake.
We'll have more with Ross Kay right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, the Canadian Real Estate Association issued its report this week on the national housing market. What did it claim, and what are your thoughts on that?
Well, what it claimed was the same thing that it convinced CBC, our national broadcaster, to report as a fact, that the average price of a Canadian home was $607,000. The greatest financial fraud ever written in the words of CBC, our national broadcaster. Listen folks, this is what the actual press release from the Canadian Real Estate Association says. This is within 20 lines of text. Canadian home sales remain historically strong in October. Home sales continued running at historically strong levels in October. National home sales edged back 0.7% on a month-over-month basis in October. Actual activity was up 32.1% year over year. All of that nonsense, up, down, up, down, up, down, up, down, in just 5 lines of the press release. The number of newly listed properties rose 2.9% from September to October. Shh, folks, that's a seasonally adjusted number. You know the previous number we stated about the 32% year-over-year gain in sales? That was an actual number. And then the previous number to that sales edged back 0.7%, that was another seasonally adjusted number, but we don't tell you it's a seasonally adjusted number. The MLS House Price Index rose 1% month over month, and it was up a staggering 10.9% year over year. Remember, folks, the MLS House Price Index is a better measure of house price because it's not impacted by the share of sales that's been ongoing. Remember, Helmut Pasternak is at your local Real Estate Board of Greater Vancouver's website, where he claims it's a beautiful metric. Obviously, Helmut never got his calculator out and asked himself, why does the average selling price nationally go up the identical amount from 2005 till today that the benchmark price does? The actual, not seasonally adjusted, national average selling price posted a 15.2% year-over-year gain in October, which means the benchmark price is on pace to hit that 15.2% in the next 3 months, or close to the year end, depending how quickly the market cools off, because the way that the benchmark is calculated, it disproportionately records the busier months, contrary to what everything the Canadian public is told. Home sales recorded MLS systems in October edged back by 7% from September's all-time record for monthly sales. Oh, that's a seasonally adjusted number again. This is the game that they play with you folks. To read and understand the 44-page report released by the Canadian Real Estate Association, to understand that, you have to have decades of experience in MLS numbers. Because not only do you need to understand what the Canadian Real Estate Association is actually saying, you have to understand what the 69 real estate boards that underlying the data are saying when they give the information to the Canadian Real Estate Association. Now, here's the amazing thing that they say in the report in the next line. So this is all, folks, this is on the first half page of a double-spaced report. I mean, the font's big, meaning it would be basically a double-spaced report. The small change from September to October reflected gains in about half of all local markets, offset by declines in the other half. Okay, so half the markets are up, half the markets are down. Wow. I wonder if they're at a different trading period in their trading cycle. Are you actually telling me that every CMA in Canada is actually on a little bit different trading cycle, and some CMAs are on polar opposite ends of their trading cycles, or they're in different trading stages that are totally polar opposite? Could that be the real reason that Korea's has half of them in a decline and half of them in a gain? Now the real magic works, folks, because this is what you need to understand. If you had 100 sales and 100 sales, so half of the markets have 100 sales and the other half of the market has 100 sales. The half of the market that's going to increase this month, get a gain, had 100 sales the previous month, and the half of the markets that had 100 sales, which are going to record a decrease this month, had 100 sales the previous month. This month, the places with where the gains are, their sales go from 100 to 120, and the sales in the cities where the market's slowing down go from 100 down to 80. So now you have 120 out of 200 sales, or 60%, being reported for those markets where the activity gained, and you have a decrease, and only 40% of the sales are now being reported in the housing markets where the activity had slowed. This con goes on every single month. Yet your economists are clueless to simple math calculations that a grade 5 math student could do if you put the math in front of them. I just showed you how identical housing stock in 50% of the country and the other 50% of the country, had 50% of the sales the previous month. The busy market now reports 60% of the sales, and the slow market only reports 20. What happens, folks, is it's called, we're trying to formulate a term that explains the average selling price from the Canadian Real Estate Association. And we believe the term that we're going to arrive at right now is the aggrandized house price, the aggrandized selling price. Because by continually focusing on the share of sales that market that is busier gains, and forgetting about the sales where the housing market has slowed, you continue to get this ratchet up effect in selling prices. Everybody believes this. This ratchet effect has gone on for 40 years. In the 1980s, every high-volume real estate broker in Canada knew how the ratchet effect worked. We knew that's how it worked because that's how we could get our 6% commission back then. You were seeing it in real time in the Canadian Real Estate Association's own words. Among the larger markets, activity was up this month in Montreal, the Fraser Valley, Calgary, and Edmonton. What happens with why is the activity higher? Well, we know that when the activity is higher, the average selling price is disproportionately higher because the multiplicity of sales causes the average to go up. You have fewer first-time buyers being measured in the market in that month. By contrast, they claim, sales fell back in the Greater Toronto Area, Hamilton, Burlington, Ottawa, and Greater Vancouver. What they're not telling people is those are the seasonally adjusted stats that they have. They're not talking about the actual stats. Because in the actual stats, those markets increased their share of sales. All of this you don't hear about. All you hear about is the 15% average year-over-year gain in October, or the better measure of price, the benchmark being up 10.9%, which, folks, just happened to be what the average selling price was up year-over-year in August. Because we haven't caught up to it, the benchmark is even more latent than the average house selling price is. So what did I see with the Canadian real estate release from this week, Jim? I saw a continuation of seller beneficial stats being released for the benefit of the home seller and for the benefit of the listing real estate broker. The buyer has not had one single stat released this month that told them the truth. The brokers who are working with the buyers, remember, they get paid from the listing sales rep. They get their commission. The commission is paid to the listing broker, who then pays the buying broker. Everything is to get the commission for the real estate agents from the seller. This is not going to end well. This fraud is going to be debunked in real time, just like we just debunked everything that you heard in the news the last couple of days. A small change from September to October reflected gains in about half of all local markets, offset by declines in the other half. 50-50. 50% of the markets got busier. They now account for 120 out of 200 sales. 50% of the markets got slower. They account for 80% of the 200 sales. What was a 50% split in sales in this model the previous month now moves 60% towards the busier markets and only 40% towards the slower markets. How come home buyers aren't told this? What I'm telling you now on the national level works on your provincial level. It works on your MLS board level. It works on your city level. It works in the community level. This is not a singular outcome of the Canadian Real Estate Association. This is a most granular, the most basic fundamental of a housing market. This happens right on your own street. If you're on a street where there's condos, townhouses, semi-detached, and detached homes. This pattern would happen right on your own street. The difference is, in Canada, you're hard-pressed to find one street that has even two kinds of housing types. It's next to impossible to find a street where you have three types. And you'd be hard-pressed to find a single street that has condos, townhouses, semi-detached, and detached, and finally, ultra-luxury detached homes on the same street. Because if you did, you could see this pattern repeat itself month over periods, over years, over decades, over a century. What you're hearing right now this week is the culmination of 40 years of misrepresentation of house prices to the Canadian public by the Canadian Real Estate Association. We can say this because we would love to have a discovery in court where someone said they claimed what we're defaming them, because we can prove what we're saying is true. That's the only reason they don't come after us. I just read the words from the Canadian Real Estate Association themselves. You can take what you want to take from it. What I can tell you is the national, as CBC reported, the average Canadian home was not worth $607,000 in October. It was not worth even close to that. Your national broadcaster, who your tax dollars fund up to the tune of over $1 billion a year, does not demand that their journalists ask the Canadian Real Estate Association for proof. Prove to us that house prices went up 1% month over month. Prove to us that your benchmark price claims of an 11% year-over-year claim are true. Prove to us that the average price of a house has gone up 15.2%. Guess what, folks? They can't prove it. We've got a $10,000 prize sitting on our website that has remained unclaimed now for 10 years because they can't prove it.
Ross, thank you so much for the update.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.